Now, let's look at the bigger picture here for investment purposes, because this is what we care about ourselves. That's what we need to care about. Can't care about what the politicians are going to do, because we know they don't really care about us. So if you look at it from investment purposes, commodities in general, I mean, it's not just oil that's surging, which I know some of you may feel like you missed a boat. It keeps going higher and higher. You don't want to buy these companies up 200-300%. Now they keep going higher and higher. I get it. I'm about to share something that's very alarming. Very alarming with you. And I'm an optimist most of the time. This is pretty negative. So if you're looking at commodity inventories, they're at their lowest levels since 1990. So over 30 years. Commodities as a whole, the lowest levels. Now, what does that mean? It means we don't have enough commodities to meet demand. And guys, this is not going to change overnight. How did this happen? Several reasons. Well, you have COVID, which demand fell off a cliff. So every commodity producer stopped producing immediately, cut costs. That was 2020. Now our government injected tens of trillions into the market, increasing demand. This came at a time when demand was starting to surge by itself in 2021, early 2021. Now it's surging much, much more. Now we have massive demand and little supply in chips, uranium, oil, gas. But let's go back to pre-COVID. And let's look at gold, silver, copper, where miners were going through a massive bear market from, end of 2011, 2012 to today. Outside of 2016, 17, gold, silver stocks fared pretty well for like a good 9-12 month period, but mostly it's been a horrible, horrible market. Now, what happens during horrible markets? And you can say the same with fertilizer, same with nickel, which is used to make batteries, EVs, which saw its price go from $20,000 to over $100,000 in a few days due to massive short covering. Something, I mean, I can't explain it in terms of the odds of that happening, the probability of that happening. It's kind of like our stock market going up like 2x immediately. Like it's just off the charts, like rare, could never happen. And that's definitely not factored into EV stocks like Ford, GM, Tesla, every major car manufacturer, right? Every one of them producing EVs. And it's not that I would short all these names or short Tesla, since they're going to own the EV market for at least another 18 months. Right? These guys are not going to be able to produce EVs at the pace they're forecasting, not even close over the next couple of years. They just don't have the supply. That's why Ford keeps raising the amount of money it's going to spend. Went from $22 billion 18 months ago to $30 billion 6 months ago. Now it's $50 billion we're going to spend. Why do you keep upping that number? Why? Because you don't have the supplies in place. You don't even know where you're going to get them. But we're going to produce 2 million EVs in 2026. I think they produce over 2 million cars, all cars, for like a 3-year stretch, 4-year stretch, and it lasts like 10 years. It's crazy. But getting back to gold, silver, copper, where weak markets for the past decade resulted in little drilling for new projects. Now, when you look at oil and natural gas, you can get up and running pretty quickly. Again, that's if you cap wells and want to start producing again. If you're looking to drill from scratch, I mean, it's not that difficult to get the permits in place, especially if there are areas that already are giving tons of permits. And it's probably going to be a little more relaxed now with oil prices higher, and we're looking at solutions. But then getting rigs there, fracking, again, I've been to every major shale area. I've hopped on rigs. It takes a few months from scratch, a few months. We could increase production pretty quickly once we get the okay to drill. Gold, silver, copper, that's different. It takes 10 years or longer to build a mine. I mean, you talk about infrastructure, permitting, which is hard to get. You better know everyone in that area, every politician. Distribution. I mean, it's massive. It's crazy. It's a crazy expensive process, which now makes a lot of sense to go balls to the wall with copper at $5. Holy cow. Gold over $2,000, silver taking off. But these are the next commodities to surge, which we're starting to see right now. Fertilizer, copper, gold, silver, wheat, corn. Coming on a nickel trade not long ago, which is hard to invest in. But if you missed a boat on oil, no worries. Because these are areas that are set to explode with inventory so depleted. And look at aluminum. We have Alcoa in our Curzio Research Advisory portfolio. And we're doing amazing on this name. I just read a note from Terrafigura Group. All right. So hopefully I pronounced that right. But they're a giant metals trading firm, right? Trafigura, I think it's called. So they recently said, going to get a lot of these notes and stuff like that, and some of the stuff you have to pay for. But they said the deficit, and this talk about aluminum, is now moving at such a speed that it's unsolvable. The world will run out of stockpiles by early 2024 as Bloomberg reported. Aluminum prices have more than doubled since the first 2020 COVID shutdowns and now sits near a 13-year high. Guys, as you can see, it's not just an oil problem. Inventories, commodities are at 30-year lows. It takes time to replenish those. What does this mean? Owning these commodities or gaining exposure to them is going to help you offset this massive inflation risk. And this inflation risk, and it gives me no pleasure in saying this, it's going to be around for a long time. A very long time. It's going to take at least 6 months minimum to years to increase inventories to meet massive demand for commodities, which we're still seeing. Even through housing, as the market takes off, rates are going a little bit higher, but not much higher. That's why this is something you can't explain. This is a market that it's confusing so many people. When you look at the past, what happened is, forget about it. I say it a lot, throw out every investment book you ever read. Because what's going on right now, there's no playbook. There's nothing. There's not like some play and, hey, you know what, this team stopped the Chiefs like 5 games ago. Let's look at what they did to stop all those fast guys. There's no playbook. The Fed doesn't even know what's going on. They're supposed to be the smartest in the room, and they are so far behind. Holy shit, are they far behind? If you think inflation is going to start moderating in the months ahead, good luck. It's going to take much, much, much longer, which means the Fed better start raising by more than 25 basis points it's meeting this month. Since you're light years behind the curve, just get it over with. 50 basis point hike in March. The next meeting, another 50 basis point hike. And if you do that, it's going to significantly lower that uncertainty and that inflationary risk. But that's definitely not going to happen. It's not priced into Fed futures, which suggests zero chance of a 50 basis point hike in March. Zero. It's going to be 25 basis. Powell actually said it's going to be 25 basis when he testified in Congress last week. So yes, this is going to be painful. But we're talking about short-term pain if the Fed raised aggressively, maybe 12 months or so, compared to a long, drawn-out inflationary trend that lasts for many, many years, which would be absolutely terrible for the markets because it's going to create massive uncertainty to where the Fed continues to be behind the curve when it comes to tightening, and you're not going to know what they're going to do. They're going to do the same thing. 50 basis. We got to get aggressive. That you said in November. Now this crisis came along. You're like, well, let's go easy. You can't afford to go easy. It's inflation. You have no choice. You're handcuffed. You have no choice. Should have been raising rates over a year ago. And we hit all-time highs in every asset class in January, February. 2021, a year later. You whatever. Let's not talk about what you did. Let's talk about how you solve it. You solve it by raising rates, creating more certainty. Otherwise, what's the next? You think Russia and Ukraine is the last of the major events that's going to disrupt the markets over the next 2 years? Are you crazy? China, Taiwan, which I don't think will ever happen just because, we can't do anything about Russia. We don't import anything, whatever. And they know that. China, we could end them if we wanted to. We could just stop buying stuff and buy it every place else and destroy their economy. And that will be massive. It will crush us as well because we need rare earth minerals and stuff like that. But those tariffs really, really, we could crush them compared to Russia, which we really can't do anything to. We say we're going to do stuff, but they're like, we don't care. We know the playbook. You did the same thing with sanctions. Last time we took over Georgia. Last time we took over Crimea. We saw our currency absolutely crash. We know exactly what's going to happen when we do this. And what do? We did exactly what Russia expected us to do with sanctions. Crazy. So not the best outlook here, but there's ways to absolutely make a fortune in this market by having exposure to commodities. And personally, I do. I have uranium investments, gold investments, but I've had this exposure for a long time where they underperform the overall market for a while. Now, thank God I have these things in my portfolio. And they're in a lot of portfolios at Curzio Research. So do says that we're right. Dollar Stock Club has a ton of uranium stocks in it, and gold stocks. We have gold stocks in both portfolios. Fertilizer stocks, aluminum stocks. Because let me tell you something. If I didn't have that, the rest of the portfolio and everyone has exposure to technology is getting absolutely annihilated. Some of this stuff I'm still holding on to. Everyone is. You look at Nike, Starbucks. You look at Netflix. A lot of these names, a lot of great names are down tremendously here. So you've diversified. You have to have exposure to commodities. Because you have 100% long-only portfolio, and it's equity portfolio, and you have no exposure to gold, Bitcoin, commodities, it's very, very dangerous, as you're seeing. Even airlines, cruises, banks, I thought they were all fantastic bets, and some of those are found in our portfolios as well. I mean, they should be doing very, very well in the environment pre-oil prices surging, so pre-Russia. But now they're trading near lows again because of the massive increase in oil prices, which is definitely going to hurt travel. I mean, 70, 80, 90, these stocks roar higher. 110, 120, 130 or higher? No, that's a difference. That's a difference maker. That's the difference of people not traveling or going away and saying, forget it, I can't afford these flights. The rent-a-cars, I can't afford it right now. Let's just wait. Let's do something else.